All right, let's dive into something really interesting today. We're going to be looking at BlackRock stock, BLK. You know BlackRock?
The big player.
Huge, yeah. So there's this new analysis from Foking Alpha. It came out January 19th, 2025, and it's all about like a unique trading opportunity. And it's not just about, like, will the stock go up or down? It's about like how can we maybe potentially profit from like the market doing its thing.
Volatility.
Yeah.
It's all about the volatility and trying to make some gains from that.
Exactly. So they're suggesting like a two-phase approach. And the first phase is all about, riding the correction wave.
Okay.
So they're thinking there's going to be a correction coming. And they think that they suggest we should be short selling BlackRock.
Short sell.
To, take advantage of that. Now, I think most of our listeners probably understand like the basics of short selling. You borrow the shares, sell them high, hoping to buy them back low. But the interesting thing here is like where they're recommending we get in.
Yeah, the entry point, that's key.
The entry point, absolutely. So they've identified what they call a short sell entry zone between 960 and 980 per share.
Okay.
And of course, like any responsible analysis, they emphasize setting a stop loss.
Got to manage that risk.
Yeah.
Absolutely.
So they're saying set your stop loss at $1,020 just to make sure, things don't go too crazy against us. Now, their reasoning behind this whole short strategy, it gets a little bit into the weeds. They're talking about these technical indicators. Have you ever like really dug deep into these technical indicators? Like what's your...
Charts are my thing.
Really?
Love them.
So, I mean, I've heard of things like bearish divergence. I don't know if that's something they mentioned in this analysis or not, but...
Oh, it is. That's one of their key signals.
Okay, so like for me, like bearish divergence, I know it's like, it basically means the price might be going up, but like the strength behind that upward movement is kind of waning.
Yeah, it's like losing steam.
Yeah, hinting at a potential reversal.
Exactly. Think of it like a car, like running out of gas. But it's still rolling forward for a bit.
I like that. That's a good analogy.
It's not all about just what you see on the surface. Gotta look deeper.
Yeah, you gotta look under the hood.
Under the hood, for sure.
So they're seeing this bearish divergence, and then they're also using, I think they mentioned Fibonacci retracement levels.
Oh, yeah. Fibonacci, always a good one.
I'm not going to lie, Fibonacci to me always sounds kind of like mystical,
A little bit, yeah.
But I know that they're like these specific ratios, like 0.382, 0.5, 0.618, and analysts use these ratios to kind of like identify potential support and resistance levels on a chart.
Exactly. They're like guideposts.
Yeah.
Help you see where the price might bounce or stall.
Okay.
And what's interesting here is they found historical support for BlackRock, aligning with this 623 to 535 zone. So they're kind of combining those Fibonacci levels with past patterns to pinpoint those potential profit areas if the stock corrects.
So they're not just like, throwing darts at a board.
No, this is calculated. This is strategic.
They've actually got like these specific profit targets in mind for the short sell. 765, 623, and 535.
Okay, not bad.
But that's just phase one, right? What happens after, that potential dip?
That's where things get interesting. Phase two.
Phase two.
That's where I think, this is where the strategy gets really juicy.
Okay.
They're predicting a strong rebound for BlackRock.
Yeah.
And they're suggesting going long.
Okay, so short during the dip, then go long for the rebound. It's kind of like, buy low, sell high, but with more steps.
A little more finesse.
Yeah, exactly. But what makes them so confident about that rebound?
Well, a couple things. First, they point to BlackRock's fundamentals. Now, the analysis doesn't get into too much detail here, but BlackRock is a giant in the investment world. Huge portfolio they've consistently delivered for their investors over the long term.
Oh, yeah. They're a major player.
For sure.
But there's got to be more to it than just like general strength. What else are they seeing?
Well, the second thing they highlight is the historical significance of this price range, 525 to 630, right? In past cycles. This zone has been like a strong support area for BlackRock, meaning when the stock has dipped to that level in the past, it's tended to kind of bounce back from there.
Yeah.
And, history often rhymes in the market.
Yeah.
Even if it doesn't repeat exactly.
That's true. That's true.
Yeah.
So they're combining strong fundamentals with, historical patterns to predict this rebound. And they've even laid out like potential profit targets for that long position.
Sure.
765, 880. And a pretty ambitious $1,000 per share.
$1,000.
Yeah, I gotta admit, that $1,000 target makes me a little skeptical.
Yeah.
Is that really realistic, given, like, the current market?
It's a bold prediction for sure.
It-
And remember, like this whole analysis,
Yeah.
it's based on these technical indicators
Mm-hmm.
and historical patterns, right?
Mm-hmm.
But it doesn't take into account like those unforeseen events or shifts in sentiment, you know?
Yeah. We've seen some wild swings in the market lately.
You've
Like
seen
just
some.
last month, remember that flash crash
Oh.
that nobody predicted?
I'm out of nowhere.
It makes you wonder, like, what kind of external factors could potentially impact BlackRock, even if, this technical analysis is spot on.
Right.
Like, what if...
Like think about potential news events
Yeah.
that could, impact BlackRock. Specifically, like
Yeah.
maybe a regulatory change affecting, asset management company
Right.
or even something. That impacts one of their major holdings.
Right. Or what about, like, interest rates? We know those can have, like, ripple effects
Huge ripple effects. Yeah.
throughout the entire financial sector. I remember back in 2023 when
When the Fed's announcement is just like, sent shockwaves through the market.
yeah. We saw a lot of volatility in BlackRock's price during that time.
Absolutely.
Yeah, it's a good reminder that, like, no analysis can account for everything.
It's true.
You know?
You can't predict everything.
Even the most sophisticated models can be thrown off
Oh,
by
yeah.
these, like, unexpected events.
You got to be prepared for the unexpected.
You do. But going back to this Foking alpha analysis, it's interesting that they chose to focus solely on technicals. Do you think that's, like, a valid approach in this case?
I mean, it definitely has its merits. Technical analysis can be a powerful tool, for identifying patterns and potential opportunities,
For sure.
especially when you combine it
Mm.
with an understanding of
Yeah.
historical support and resistance.
Like they've done here.
Exactly.
But couldn't you argue that, like, relying solely on technicals is kind of like driving a car while only looking in the rearview mirror?
Oh, I like that.
You're missing what's happening right in front of you.
That's a great analogy.
Yeah.
It really highlights the importance of like
Yeah.
a holistic view, right?
Yeah.
You got to consider the technicals, yes, but also the fundamentals,
Yeah.
the broader economic climate, and, any potential news or events lurking on the horizon.
So for our listener who might be, considering this two-phase approach based on this Foking alpha analysis, what would you say is, like, the most important takeaway?
I would say, remember, this is just one piece of the puzzle.
Yeah.
It's a starting point,
Okay.
for your research and your analysis. Don't just jump in based solely on this one report.
Solid advice. Always do your due diligence. And of course, never invest more than you can afford to lose.
Golden rule.
That's investing 101.
Investing 101.
But I do think this analysis provides, like, some interesting food for thought, especially that whole concept of, like, profiting from both the dip and the rebound.
It's a strategy that definitely requires a higher level of risk tolerance,
Yeah,
and active management.
for sure.
But for the right investor,
Yeah.
it could be very rewarding.
Okay, so to wrap things up, we've taken a deep dive into this Foking alpha analysis, exploring their rationale for this two-phase trading approach with BlackRock stock. They're suggesting, a short position during a potential correction followed by a long position to capitalize on that anticipated rebound. But as we've discussed, it's so crucial to consider the bigger picture.
Absolutely. Technical analysis is great, but it shouldn't be the only thing you base your decisions on.
Yeah.
Always consider those fundamentals.
Yeah.
The economic context and any potential news or events that could, shake things up.
Now, this analysis focused on technical indicators and historical patterns, but I'd love to hear from our listener. What other factors do you think could influence BlackRock's stock price in the coming weeks? Head over to our website or our social media and share your thoughts. We're always eager to, continue the conversation.
Absolutely. The more informed you are, the better equipped you'll be
Yeah.
to navigate this ever-changing world of investing.
Yeah. Until next time, keep diving deep. It's fascinating to me, like, how this analysis, it kind of, like, weaves together all these different threads of information. You got the technical indicators, you got the historical patterns, even those, like, Fibonacci ratios. It's almost like they're building a case, like detectives in a financial thriller or something.
Yeah. It's like a puzzle, right? They try to put the pieces together.
Exactly.
And just like a good thriller, there are always those twists and turns that you can't anticipate.
Right.
Because at the end of the day, the market is driven by human behavior, right? And
Yeah,
people, they can be unpredictable.
that's for sure. And speaking of human behavior, I'm curious about like the psychological aspect of this whole two-phase approach. It seems like it would require a certain mindset, like
Mm.
a willingness to embrace that volatility and potentially even profit from it.
Oh, absolutely. This is not a strategy for everyone.
Right.
It takes discipline, patience, and a real understanding of risk management. Because think about it. You're basically betting against the market in that first phase,
Mm.
and then you got to pivot and ride that wave up in the second.
Right.
So it takes a certain level of confidence, conviction to pull that off.
And probably a good dose of like emotional
Oh
detachment.
yeah, you got to be able to keep your cool.
Yeah. I know I'd be like biting my nails watching those price swings, wondering if I made the right call.
Yeah, but that's why it's so important to have a plan
Yeah.
and stick to it.
Right.
Don't let emotions dictate your trading decisions.
Okay.
That's a recipe for disaster.
Right.
Have a plan. Set those entry and exit points. Manage your risk carefully. And of course, never invest more than you can afford to lose.
Solid advice as always. But for our listener, who might be
Yeah.
kind of intrigued by this approach, what resources or tools would you recommend for like further exploration?
Well, first and foremost, I always recommend developing a strong foundation.
Yeah.
In both technical and fundamental analysis. There are some great books out there, online courses, that can teach you the basics.
And beyond like the educational resources, are there any like specific tools or platforms that you find particularly helpful for like tracking market trends or analyzing charts or even like back testing different strategies?
Absolutely. There are several reputable charting platforms that offer really advanced tools for technical analysis
Hmm.
and for backtesting. There are these simulators that let you test strategies using historical data.
Oh, wow.
That can be really valuable for, gaining confidence and refining your approach.
So to wrap things up, we've taken this like fascinating journey through this Foking Alpha analysis, exploring their, unique approach, coup phase approach to potentially profiting from BlackRock's predicted volatility. But remember, it's just one perspective. It's just one piece of the puzzle.
Yeah.
The real key is to use this information as a springboard for your own research and analysis.
Absolutely. Always question. Always dig deeper. Never stop learning.
Mhm.
The market is constantly evolving.
Mhm.
And the more informed you are, the better equipped you'll be to navigate all its complexities.
Well, thanks for joining us on this deep dive. And as always, if you have any questions or want to continue the conversation, head over to our website or find us on social media.
Until next time, keep exploring, keep learning, and keep diving deep.